Anurag Kataria. He is VP and Business Head, ITI Investor Services, and he joined us in Mumbai. Anurag, hi, welcome to the show. You heard Mr. Kataria talk about immediate correction up to 1700 levels in gold, but then 2000 is a level that nobody really seems to be ruling out. What's your sense on how people should be trading today and tomorrow ahead of all these data or the speeches that we are looking to now?
Yeah, absolutely, Manisha. What we have been seeing as a $2,000 price target, and that is what more worrying now, because none of the big fund houses or the banks or the institutional traders who have revised the targets below $2,000. And the market expectation is certainly for a $2,000. That makes a little bit difficult for market to achieve those levels, as we have seen in the past also, because a lot of hype is made around $2,000, so that seems to be a worrying factor. As far as immediate trading pattern is concerned, I absolutely agree that around 1861 to $1874 seems to be a good resistance zone, which we have seen time and again, and with the support kind of coming in at around $1810 to $1815. So we would be trading into that range, and on the MCX front, we will be trying to put up a stop loss of around 750 to 800 for a potential target of around 27,000.
Anurag, how about the silver prices? Because they seem to be following gold quite closely. We did see levels below 40 in the markets in New York yesterday. Are you expecting those kind of levels to come back today or tomorrow, as the markets are quite jittery with all the data that is expected?
Yeah, absolutely. But then we have to look at silver as far as the industrial demand side is also concerned, because if you look at the entire base metal pack, they have been quite sharply supported, and we have seen a rebound at the upper side. And that's the only reason we have seen silver maintaining its ground at around 64,000 levels yesterday also and today morning also. So we feel silver movement towards the south side will be pretty, sluggish. So we would recommend buy on silver and sell on gold. So that will be the strategy I think one should follow for a couple of days to be betterly hedged and to even out the portfolio.
How about the crude prices? Because while we saw $90 yesterday, today has been a day of consolidation, even some profit taking. What kind of levels are you expecting there? And ECB leaving the interest rates unchanged. Do you think that does anything for the commodity market?
I do not think, because they have not left with any other option, and because this kind of announcement will not happen so sharply, because it's an anticipated data until unless we'll have to read between the lines, especially when Mr. Obama speaks post-closing at international markets. That will be a key speech to watch out for. That might give us some kind of indication tomorrow morning. But if you look at crude, I believe it's more to do with the supply constraint and the kind of storm season we have been seeing at the US. So around $91, $92 seems to be a resistance level wherein one can take a chance to go short for a potential target of $88. But we would still recommend to stay away from crude, because most of the news flow is driving the prices rather than the fundamentals.
Final word on the base metal prices, really, Anurag, and copper prices did see a bit of a rebound. We saw them coming all the way back to 423 kind of levels today. Do you see further steam into this because of supply concerns, or do you think it might really see some correction from here on?
Isn't it interesting, Manisha, because whatever mayhem which has happened for last entire week in bullion pack and even in crude prices, most of the traders have left out copper and other base metals, and it has given what it does the best. It has given a sharp upside from 414 levels to 423 to 24 levels. We feel that 419 seems to be a good support for copper, and it has a potential to go to 428. So we would be a bull on the copper front for a potential target of 428.
One quick question on the base metal, the whole of its sector really, while copper has been inching up, we've seen some support come back in case of nickel and zinc as well. Have you turned a buyer for the sector as a whole?
We have not turned a buyer on the entire sector, but yes, we are very much comfortable going long on copper, and for zinc we will be looking out a level for 103 to 103.50 to be a reversal point. Till that time we would just leave the zinc as it is and nickel as it is.